Hello, guys. So in this session, we are going to look at how to organize the business for success. So we are going to look at organizational structure, organizational culture, and organizational change management. So first of all, we'll start with organizational structure, or what we call organizational configuration. Now, organization's configuration consists of the structures, the processes, and relationship through which it operates and through which it can gain success. Okay. So structure has its conventional meaning of organizational structure, and the processes drive and support people. So these define how strategies are made and controlled and how the organization's people interact and implement the strategy. And the relationships are the connections between people within the organization and between those inside it and those that are on the outside. So relationships could be internal and external relationships. Now, when it comes to organizational structure, what does it reveal? Okay, the formal structure of an organization reveals who is responsible for what, who communicates with whom. The upper levels of the structure also provide the skills and knowledge that the organization requires. So let's look at the types of organizational structure. Okay, so there are various types, but there are key ones that we'll look at. And the whole thing about your strategic case study exam is about knowing the pros and cons, or the merits and demerits of everything that you learn. So when you take a structure in the exam, they may ask you, why do you require a particular structure, or which structure is better than the other? You have to look at what the pros and cons. So we'll look at the entrepreneurial structure, which is a type of structure where the owner manages the business himself and makes all the major decisions. So with this one, it's just the entrepreneur at the center, the boss and his subordinates. Okay, so this one, there's no formal structure, or there is a formal structure, but it's just focused on what? The boss and his subordinates. So you just have a lot of subordinates under the boss. So you have staff here, another staff, another staff, and another staff. Okay, so with this one, it's just one person at the center who dominates. Now, this kind of structure is good, but sometimes it can waste time. Okay. But what are the advantages? There's quick decision making because there's one person taking the decision and everybody must follow his goal. Goal congruence is flexible and can easily change, and there's good control. Okay. But the thing, the weakness of this organizational structure is that it cannot expand beyond a certain size, and it cannot easily cope with diversification. If you want to diversify to another area, it may be difficult. And sometimes there's lack of career structure for lower level employees because they are always doing the same thing, and it's difficult for anyone to be promoted. It may be too centralized because everything is dependent on the entrepreneur or the boss, and the owner has limited expertise and resources because he doesn't bring anybody on board. It's just him alone. And most organizations do start with this structure and move on to functional and other divisional structures. Okay, that's why we say what, it is flexible or adaptable to change. So be ready to criticize a structure. Mostly ICA questions, or most case study questions, start with this structure where somebody started on his own and he decided to grow. And sometimes the person may be family centric. He doesn't want to change. Okay, he wants to stay with the structure, and it's difficult for the person to change from that. Okay, so be ready to comment or criticize some of these things that do happen. Now, the next one we have to look at is where the person decides to now build in a formal structure. So in a functional structure, people are organized according to the type of work that they do. Okay, so under this structure, you may see the board of directors, the CEO or the MD, and also then various departments or various functions. So you have sales and marketing, production, function, the finance, R&D, IT, HR. Okay, all these managers are under the MD. So this is a functional structure where everybody has a particular function. Okay, or departmental functions. So what are the advantages? The advantages of this structure is that, one, we will have specialized staff. There's easy communication and coordination within the various departments, and there's immediate problem solving because if the problem has to deal with a particular department, they are going to find ways to deal with it. Not so. And there's reporting quickly, or there's quick reporting or efficient reporting, and the business can easily grow because the various functions must work together. And there's future career growth opportunities because people may want to level their playing field and learn more and go higher. Also, or even switch careers because there are various options in the organization. And there's no duplication of work because each person is doing a particular job because of specialization. There's easy decision making and there's easy allocation of resources because when you're allocating resources, it goes to each particular department. Okay. But because one person is doing one separate thing, sometimes there are some disadvantages. Okay. Efficiency may decrease due to relaxation. They are too relaxed because they feel that, okay, I'm only doing this. Okay. And that's another problem. And there's focus on only one area for a particular manager or a particular division. Okay. Particular department. Now, communication between the department might get worse. Sometimes it gets worse, and the workers get bored because they are doing the same thing over and over again. Sometimes there could also be slow career because in some entities, if you are in IT, you stay in IT for a very long time, or maybe marketing and sales, maybe you will want to switch, but it's difficult for you to switch. And there's lack of consistency because of doing the same routine work. People get bored. Okay, so these are some of the disadvantages if you have to explain them. Then from here, you may want to, when the business does grow, it may want to have divisions which all have the same functional structure. But the problem is that grouping according to divisions and projects, are you going to duplicate these functions? That's one thing you need to ask yourself when you are dealing with such questions. So we have the product or divisional organizational structure. With this one, the organization is structured in accordance with the product lines or divisions or departments. Now, each division has its own management structure, and within each division, there are functional departments for the specific division. Okay, so when you look at this one, you see how it is. So let's look at a bank. So with the bank, these are various divisions. You have those that manage the current account, savings account, house loan, investment division, car loan, and running finance. Now, under each of these divisions, you may have, under the current account, you have those that do the marketing, those that do operations, those that do R&D. Okay, so sometimes there could be duplication, okay, of resources because under each of the divisions, you must have functions that may exist in the other ones. Okay. The advantage is that the profit of each department or each division can be calculated because they are autonomous. No, so there's independence for each of them, and high quality work is done due to independence and each of them having a lot of functions. No, so in there, and growth is easy because the division can grow on its own. And training of general managers is also easy because they are autonomous. No, so, but the problem here is that it may be difficult to control or manage because each person sees himself as his own boss. And another problem is the lack of goal congruence. Why? Because the managers want to increase their own ROI and RI, their return on investment and residual income, or their divisional return on capital employed. If that is the case, you will realize that everybody wants to do his own thing that would increase his bonuses or performance incentives. And also, instead of doing something that will benefit the organization, that is the problem. And also, there's allocation and appointment of center costs will mostly be a problem because sometimes it's difficult to gather costs, especially in a division where there are a lot of functions. It will be difficult to put costs together. And sometimes we may miss economies of scale, all because of the lack of goal congruence. Everybody decides to build his own wealth. Okay, these are some of the advantages and disadvantages of the divisional or product structure. Okay, so sometimes if you don't see it as a division, each product, the names of the product, like we see here, becomes the name of the division. Then we have the geographical organizational structure, which is like divisions, but in a particular geographical area. No, so this one, the organization is structured according to the geographic area. So some authority is related to the head office, but day-to-day operations are handled on a regional basis. So here you can see the CEO, we have the MD in Pakistan, the MD in India, the MD in UK, and the MD in Japan. Okay, so we have geographical jurisdictions, also geographical divisions. So this one is an extension of the divisional structure. Even with the MD in Pakistan, he may be controlling other divisions, and those divisions each have functional structures. So this one is broader. Okay, so this divisional structure is beyond a specific geographical area. It extends, not so. So one thing is that with this structure, the advantage is that there's easy geographical growth. You can easily switch to other geographical areas, and there's clear responsibilities for each manager. There's easy training of general managers because they are on their own and you can easily train them. The top managers are free for planning because other people will be handling the menial tasks. There's flexibility and easy to adopt new changes. There's independence because they are all on their own, and profit of each area can be calculated. The same way we saw for the divisional, this is an extension of the divisional, right? So the same way, the disadvantages include it is difficult to control or manage because it goes beyond the minimal sense. There's lack of goal congruence because everybody wants to do his own thing. They feel they are their own boss. And there may be duplication or extra utilization of resources because the finance function can be in maybe in India. When you look at the various product structures, each of them may have the finance function, which means like the same thing that can be done, you are employing more people to do it, which brings extra utilization or duplication of resources. Sometimes allocation of costs will be a problem, just as I explained earlier, and economies of scale may be missed because you are spending all your costs in different sectors instead of focusing on what can grow the organization. Okay, so these are some of them. So you may have other structures like international structures, conglomerate structures. They all look like this, right? Where you have different businesses, but all are under the same board of directors. Okay, so that's a conglomerate structure. Now, with a matrix organizational structure, this is basically a combination of two types of organizational structures which were described earlier. So here you may have functional, divisional, geographical, or product. So the employees from the different departments were collected to form a group to achieve a particular staff. So it may be a mixture of what various teams. So let's say, assuming here we have our general manager, and also, and we have the various functional heads. Assuming we are doing a particular project, or we may have a different division, right? So let's say, assuming this is not a project, but it's a particular division. So division A, we have division B, we have division C, and also. Now, if we want employees from in this division, we still have the same employees who are working in engineering. And also, the manager in engineering will be part. The manager in operational will be part, and as employees, finance, and others. So we pinpoint some people. So here, let's say Kojo works in engineering also. So we take Kojo. Here we take Kwesi. Here we take Brad, and maybe Joe. And also, now all these people work in this department, but in division A or in project A, I get it. These people are all going to report to the project manager here. You understand? But as part of their normal divisions, they are also going to report to the engineering manager. So Kojo will still report to his engineering manager. Kwesi will still report to his operational manager. And also, Brad will still report to the financial manager here. And Joe will also report to the other manager, maybe marketing here. And also, apart from that, in the various divisions, they are going to also respond to this manager. The same happens, right? So they have their project responsibilities or their divisional responsibilities or the geographical responsibilities, as well as what their individual functional responsibilities. You understand? So that is how this one looks like. It's a combination of two or more structures. Okay, so that's the matrix structure. So you see, at the functional level, they don't work together. They work in their individual department, but at the project or divisional level or product level or whatever, they are being consolidated, people from all areas. So it becomes multidisciplinary teams. People have skills that complement each other, and also they will have skills that they work hand in hand to achieve a particular goal. So let's say if this division wants to bring out a new product, not so we bring people from all the other departments, bring them together to do this project, and also to make sure that a new game or something is released. Okay, so that's the matrix structure. Okay, so as the organization grows, sometimes it prefers to go this way. Okay, it may go divisional, but it prefers the divisional in the form of a matrix structure where somebody responds to two managers. Okay, so the advantage, this organizational structure features a lot in your exam. Okay, so you must be ready because here everybody works together as a team. That is what they are mostly going to ask you. Okay, so the advantage is that sometimes there's greater flexibility, which facilitates efficient operations in the face of changes. As we saw, everybody can move here and there. And it improves communication within the entity because instead of working just functional, we come together at a project or divisional level. Now, there's dual authority And because of that, it provides multiple orientations so that the functional specialists will not get wrapped in their own concerns, right? So there's like opportunity to grow as well. And it provides a structure for allocating responsibility to managers for the end result to be achieved. And it provides an interdisciplinary cooperation and a mixture of skills and expertise, as we saw, multidisciplinary teams. The disadvantage is that the dual authority may bring a conflict between the managers. So, okay, I've given you a report. I want you to submit it on Monday. And this manager also says that, okay, on Monday, you have to make a presentation. The other one said you also have to make a presentation. Now, there's conflict because you are reporting under two managers. That could be the conflict. Individuals who need to work with two or more bosses may suffer from pressures, unnecessary pressure, because you are reporting to two or more bosses. Sometimes it is more costly as some tasks are additional to the functional one. Yes, and you have to incur more costs to bring project costs are going to be incurred, or additional divisional costs for forming that division. Sometimes it's also difficult for management to accept, as they may feel threatened from being what? Usurped from their own authority. It's like somebody is taking over their own authority, not so, because you have to be working here. So there's one scenario where you're a manager here, but under a project, you may not be a manager. No, so you may be working under another manager. And so consensus and agreement may be slow, and it may slow down decision making because you have to report from two phases. So we report at the project level and report at the functional level, all to the MD, which may be slow. So all these organizational structures that we have seen may be structured in a particular way. Okay. So it may be a tall or it may be a flat business. So if you are looking at the relationships, the internal relationships that we may have, not so, what we may have may be a tall structure or a flat wide structure. Okay. So when we talk about a tall and flat business, there are some things that you must understand. Okay. So we must first understand what we call span of control. Now, the span of control is the number of subordinates who report to a manager. Okay, that is, if a manager has 6 subordinates under him, then the span of control is 6. That's what span of control means. So if a manager has a large number of subordinates reporting directly to him, the span of control is wide. So for instance, if I have Joe here, Nosu, and under Joe, there are 1, 2, 3, 4, 5, 6, 7. We have a lot of stuff under Joe reporting to him. This is a wide span of control, right? But if you have the span of control very small, so let's say each manager has 3 staff under him, also, then you come here, this guy also has 3 staff under him. You come here, this guy also has 3 staff under him. You see, this span of control, there are only few reporting under a manager. So we say this span of control is narrow, okay? So in simple terms, when you want to understand this, the number of staff who report under a manager is span of control, right? And the number of hierarchies, so this one, you could see that there's only one hierarchy, right? It's only Joe controlling everybody. But when you look at this, a lot of people are reporting under maybe Kofi, not so. Kofi has 1 layer, 2 layer, 3 layers. There are a lot of layers. You can have another layer here. So the number of hierarchies in an organization structure is what we call the scalar chain, right? So it's a chain, okay, of structures. So that's the scalar chain. So you could see that the wider the span of control, the narrower the scalar chain. Not so, or the smaller the hierarchies. So if the span of control is narrow, you realize that we will have a wider scalar chain because you have a lot of hierarchies. So understand it like this. This is very important because sometimes if you want to explain the relationships, they may ask you distinguish between a tall and a flat business. Okay, so look at the tall structure is the one that has what? A narrower span of control but a wider scalar chain. And the flat businesses or the flat wide structure is the one that has a wide span of control, a lot of people responsible under one manager, but the hierarchies are small, right? Just like we saw for Joe, he has a lot of stuff under him. So that is a flat wide organizational structure. So this span of control, what affects it? So there are some factors that affect span of control. One is geographical dispersion. So if the branches of a business are widely dispersed, then the manager will find it difficult to supervise each of them, right? And thus the span of control will be smaller because they are all dispersed elsewhere under the same manager. So it may be difficult to control them. Also, the capability of workers, okay? So if the workers are highly capable or they need little supervision and can be left on their own, okay, people who they don't need supervision that much as they are motivated and take initiative to work, the span of control will be wider because these people can work on their own. They are not lazy. They are people that can leave them to do the work that they want to do, right? So we will have a lot of these people to work on their own. Also, another thing is the capability of the boss. An experienced boss with good understanding of the task, good knowledge of workers, and good relationship with the workers will be able to supervise more workers, so wider span of control. So value added or the value addition of the boss. So a boss that is adding value by training and developing new skills in the workers will need a narrow span of control than one who is focused on only performance management. I get it. So this is the reverse of the capability of the workers point that we saw above. You get the idea. So if the boss adds a lot of value and develops new skills, because he only needs few people at a time to do this, are you getting it? It will limit the span of control, or it will be a smaller span of controls. Also, the similarity of tasks is another function, or it's another factor to consider to narrow or widen the span of control. If the tasks that the subordinates are performing are similar, then the span of control will be wider because the supervisor or the manager can supervise them at the same time. And the volume of the other tasks. If the boss has other responsibilities, such as membership of communities, involvement in other projects, liaison, or the liaison with shareholders, the number of direct reports will need to be smaller because he has a lot of activities and required administrative tasks. If the boss is required to have a regular face-to-face meetings, complete appraisal and development plans, discuss remuneration benefits, write job descriptions and employment contracts, explain employment policy changes and other administrative taxes, then lesser people are needed because the boss has a lot of work. So we only need few people it's like each person will have another under him to do these things, right? You don't need so many people because the boss has so many tasks that need to be performed. So he has people for each task, and under them are people also responsible. So it will reduce the span of control. So when you are talking about flat wide organizational structure and tall organizational structure, remember to chip in span of control and scalar chain. So you could see the tall organizational structure has a wider scalar chain. So you see this guy has 2 people under him, 2 people have 4 people under him, not so. And the other 2 also have people. So you see that here the span of control is narrow because you only have few people reporting under one boss. So the hierarchies are more. So tall organizational structure has a wider scalar chain, narrow span of control, right? But when you see a flat organizational structure, what you can see is that there are a lot of people reporting under one boss. So meaning what? Wider span of control, narrow scalar chain. Okay. So just know the advantages that with a tall organization, better control due to the narrow span of control, and there's a defined career ladder. You can easily climb because that one, you can easily move. Maybe you were the finance manager, you can move to what? Maybe the financial executive, you can move to the chief financial controller, maybe to a finance executive or something. No, so then it will bring specialization. They are also close control, which is the control directly under the manager, can bring rigidity. You stay where you are for a long time. Sometimes it blocks your initiative. That's also the disadvantage. There are a lot of increased administration and overhead costs. It lengthens communication and decision making. And the strategic apex, which is the board level or the top management, are mostly distance for the customers because they don't know what is happening down there. I getting it because of the bureaucracy. But when it comes to the flat organization, the strategic apex, which is the board of directors, are close to the people working, like the entrepreneur. He sees everything that is going on. He's close to the customers, and they're saving on managerial costs because you don't need so much managers. Okay. So sometimes there's loss of managerial control. That is the disadvantage, and loss of middle management interface. And if delayers, loss of middle management knowledge. So delayering is the process of cutting down hierarchies in the organization. Okay, maybe you don't have money, so you want to cut off some management levels. That is what we call delayering. So I am thinking that when you get every organizational structure, no matter what it is, try to chip in span of control, tall organization, flat organization. It tells the examiner that you know what you are about. So as part of the internal relationships, we know that sometimes we may want to center all the function at the top, at the head office level or at the top management level, and leave other things not so be. So we control everything from the top. The degree of which decision making is concentrated as upper levels of the organization is what we call centralization. Everything is centralized. And decentralization is the degree to which lower level employees provide input or actually make those decisions. So where we delegate decision making to the lower levels, then we have decentralized. Okay, now the problem with this is that the advantage of centralization is the disadvantage of decentralization. And the disadvantage of decentralization is an advantage to centralization. So I've looked at it like this, which will make you get more points. Now, when it comes to centralization, leaving everything at the top, decisions become easier, not so, to control and coordinate. Okay, because now you do things at your own level. Nobody is going to conflict with you. And the senior managers have access to the big picture, which is the overall organizational strategy or organizational objective to try to achieve. The senior managers can also balance the demands of the different functions, and there's better decision from the senior managers' expertise or skills. Okay, it may reduce overheads because we need fewer management salaries, and crisis decisions can be taken speedily. We don't need to reference anybody or call anybody. If the thing is emergent, is urgent, we need to take it up immediately. And policies can be standardized or organization wide. Everybody follows the same goal to achieve it, right? The disadvantage is that it avoids overburdening the senior managers. The disadvantage is that one thing that happens is that the senior managers will have pressure on them, not so, because they have to be doing everything. But if it is decentralization, the senior managers, you overburden them because you do the smaller tasks and they'll follow the bigger ones. Okay. And the thing is that it doesn't motivate the staff with responsibility, not so, because you do everything and just impose it on them. There might be dysfunctional behavior, or people may not feel part of the decision-making process. And the people at the top, if it is centralized, they don't know what is going on at the local level, okay, which is the advantage of what? Decentralization, because you get access to local knowledge. And there is less quick decision making, or decision making is slow. Why? Because when you take the decision at the top level, when you give it to those at the lower level, they don't want to implement it, right? Because they don't know what is going on. Now, it doesn't facilitate development or success of junior managers because they can't grow, because everything is done at the top or the head office. And there are no distinct areas for accountability or control from managers because everything is done at the top. Okay. And sometimes it is not supported by, let's say, communication technology like IT, information systems, because everything is done from one boss or the top level or the head office. And it's not flexible in the face of customer demand because they don't know what is going on at the lower level. They just make policies and impose. The opposite is whatever is opposite to centralization is the advantage or disadvantage of decentralization. Okay, so when it comes to decentralization, because people are involved in the decision-making process, it motivates them. Also, it gives them responsibility. They are aware of what the front line, or they are aware of the look. They have local knowledge. There's quick decision making because we don't always have to go to and fro from head office or from the top management. We can do everything ourselves, and it facilitates development or succession of junior managers because they can grow their career prospects. There are more distinct areas of accountability for control, and it is mostly supported by communications technology. They are more flexible in the face of customer demand, unlike centralization. Not so. But the disadvantage is that with decentralization, decisions are not easier to control and coordinate because everybody is doing something separate. And senior managers do not have access to the big picture because everybody is doing small and menial tasks which they have to what? Bring together. And the disadvantage too is that most managers do not want to decentralize. They they are found in the I can do it myself fallacy. That means that they think they can do it themselves, not so. And sometimes there are duplication of cost, because if you are doing divisionalization or decentralization, you have to duplicate functions. Okay. And sometimes crisis decisions or decisions that are urgent cannot be taken immediately, which you may lose some money. Let's say a contract comes immediately. If it was taken at the top level, they can hastily go into it and say, okay, let's take it or leave it. But these people have to consult the manager. Do you have an appointment? You have to wait. And by the time you see, because of bureaucratic behavior and other things, you lose that contract. Meanwhile, if it was the top managers, they'll do it initially. And policies may be difficult to standardize world organization wide, because everybody is doing his own thing. Everybody sees himself as his own boss. Okay, so it makes it difficult. So these are the advantages and disadvantages of centralization and decentralization. In an exam, they can, instead of using decentralization, they'll replace it with the word divisionalization. So note that it's the same thing, where you divisionalize or delegate authority to people at the lower level. That's a form of relationship we can have in an organization. Which is better than the other depends on the kind of organization. So you must be ready to deal with it, as it features a lot as part of your case study exam. Now we come to organizational structures which may be external, okay, external relationships that we can have. So we first start with a boundaryless organization. Okay, so this is a contemporary approach to organizational design, organizational structure. It is an organization that is not defined by or limited to the horizontal, vertical, external boundaries imposed by a predefined structure. So there are different types of boundaryless organizations. So there's no boundary to this. So we have what we call a whole organization. So this organization keeps its core business to itself, and the rest of the processes are outsourced. So we do our core business, then we outsource the other ones, right? So we mostly call these whole corporations or whole organizations. So if I design and architect shoes, or I make calligraphy on shoes, that's my main job, but I have finance, HR, and other things, I may outsource those ones and just focus on the business that I do, I am good at, right? The core business. Now, with a virtual organization, it involves detached and disseminated entities from employees to the entire enterprise, and requires IT to support our work and communication. So they do not represent a firm's attribute, but can be considered as a different organizational form. So people are working from home, they just meet on Zoom to discuss work processes, share reports and stuff, right? So a virtual organization, we do teleconferencing, we use Microsoft Outlook, mails and stuff, but the work is going on all right. Just that there's no physical geographical location. It's like we are not all at the same place. We are all at different places and we share work. So there's no boundary. So it's another boundaryless organization. The third type is a modular organizational structure, which refers to a business that can be separated and recombined to work more efficiently. So automotive, computer, and appliance manufacturers have been on the cutting edge of modular study, but the principle may be applied to any business, large or small. So we can separate people from this phase, this phase. That is why, let's say, for instance, Microsoft, you can bring any programmer from anywhere to come and work in Microsoft and it will fit. Any product designer can be brought in and it will fit, right? You can disassemble one organization and reassemble the same team in a different organization and it will still work. Okay, so because of IT changing, this is what, so a project manager may be taken from here, an IT manager, a product designer, a web designer, maybe a UX UI, which is user experience or user interface designer, and they will all fit together. So that is a modular organization. So we have to look at virtual organizations, just like the one we saw, right? Now, in detail, development in technology have actually enabled the creation of virtual teams and virtual organizations. Okay, so these ones, they may bring it in because of Zoom and other things. So virtual organizations can actually outsource areas of their activity and use freelance workers. So for instance, for me, most of my work that is done online regarding digital marketing agency, I use a lot of what we call course influencers. I use ghostwriters. These are people who write articles and material for you. Then you pay them. Okay, they don't disclose themselves, but they are ghostwriters. They are people like that. They are also, you can outsource areas that you don't have to work so much, maybe voice recording or what we call voiceovers. You can outsource them to people. Okay, so you can outsource. Also, you can organize territorially. without the overhead costs of local offices, and without the difficulties of supervision, communication, and control. Everything is done online. You can also centralize shared functions and services like your data storage and retrieval, technical support, or secretarial services without the disadvantage of what? Geographical centralization, and with the advantage of decentralized authorities, databases, and communication via email, right? We can create genuine interactive sharing and access to common data. Yes, you can use email, you can use Google Drive, okay? So that is why it is virtual. We can also adopt flexible, cross-functional, and multi-skilled working by making expertise available across the organization. So a virtual team will co-opt the best people for the task, regardless of the location. So you have your product designer here, you have your communications manager, you are all working online, right? So that is the advantage of a virtual organization, or what a virtual organization can do. So remember that we have three different types of what? Holo organization, boundaryless organization. So remember them. You have the modular, you have the virtual, you have the holo. Also remember them. Then we come to another type, which is a symbolism of organization, okay, organizational structure. This is what we call the Shamrock organization, which was also developed by the management author or philosopher Charles Handy. So the Shamrock leaf shape is a symbolic representation of an organization with three types of workforce, okay? So Charles Handy said that, okay, we have the central core, which is those who are permanent, the full-time and critical employees, those who work full-time, those who are the core of the business, okay? Then the second part of the leaf has the independent contractors. These are outside contractors who perform key jobs and services for us. So those that we can what? Outsource work to. Are you getting it? And then we have the temporary hires. These are the part-time employees who are what? Added or deleted as and when we need them. So the casual workers, the part-time workers, they all fall under temporary employees. So remember that when it comes to the Shamrock organization, we have three leaves. No, so we have leaf one, who is the central core, the permanent employees, those who we actually need, okay? And remember, these people are the people that actually give you competitive advantage, because these people must always be there to sustain your competitive advantage. We have leave two, which are the independent contractors, and also those who are independent, or the outside contractors, either they are employed to work or they are contracted to work for us on a project, or we outsource to them. The third ones are the temporary hires. We just need them for a particular period. Are you getting it? So please remember the Shamrock organization if you are being asked. It just tells us the various relationships of the types of staff that we can have in an organization. So your syllabus also makes reference to outsourcing. So we have to know the difference between outsourcing and offshoring. Now, outsourcing refers to contracting work out to an external organization. And usually companies outsource to take advantage of specialized skills, cost efficiencies, labor flexibility, and maybe to leave you to focus on what key things, right? Maybe you focus on your core functions. That's the benefit. But there are some risk of outsourcing, because there could be misaligned interests of the clients and the vendors. There could be increased reliance on third parties. If you always outsource, even when it comes to something that you are supposed to do, you may outsource. And there may be lack of in-house knowledge of critical, I get it, don't necessarily core business operations, because you only focus on your core one. So something that you can do at a cheaper cost, you outsource to someone. And that is the disadvantage. Now, when it comes to offshoring, it is off your shores, right? You are doing work, it's a type of outsourcing, but here you are doing work outside your country. So the same work will be outsourced, but it is done in a different country, okay? Usually it's due to a lower cost. So let's say if IT in Ghana is expensive, I can choose IT in India because they can work for a cheaper cost, right? Or maybe I can do IT in China. Also, so better availability of skilled people and getting work done faster through a global talent pool. So I bring people from different countries to work. They may not necessarily be in the same organization. So even offshoring can still utilize virtual teams. So I could say that offshoring is a type of outsourcing, but here we focus on different countries off our shore. So it is often criticized for transferring jobs to other countries, and other risks include geopolitical risk, language differences, and poor communication. As you know, language barriers, culture barriers, and restrictions. Some countries have restrictions to IT and other things. Maybe the money that you even get there, so you cannot bring it back. Okay, there may be restrictions. So these are the disadvantages and advantages I get to know of outsourcing and the difference between outsourcing and offshoring. Be ready to explain when you are being asked. It's not anything difficult. Now, when it comes to shared services, this is the provision of a service by one part of an organization or group where that service has previously been found in more than one part of the organization. Thus, the funding and resourcing of the service is shared, and providing the department effectively becomes an internal service provider. So they are used in many parts of the same organization. So one thing can be done. Let's say if we have divisions, so all these divisions need IT also. So we can create a separate IT function and give services to all the various departments. That is shared service. Okay, so a shared service center is a center for shared services in an organization. So it's the entity responsible for the execution and handling of specific operational tasks such as accounting, HR, payroll, IT, legal, compliance, purchasing, and security. So these ones we can create a separate division or a separate department for them, and that will become what we call shared service. Okay, so that is the internal and external organization. So we also have a global service center, which is like a shared service, but on a global scale. All your divisions that you have will respond to that global division or global department that has been set. So everybody reports to that one in terms of IT, legal, marketing, or whatever it is. Okay. So we move to a more interesting aspect of organizational structure, which your examiner will mostly be concerned about, which is the contingent theory of organizational structure and the organizational stereotypes that this brings. Okay. So the contingency theory of organizational structure states that the most effective structure for an entity depends on its specific circumstance. So depending on the circumstance, it brings out the best structure. So the organization should adopt a structure that aligns with its size, how complex it is, its strategies, considering variations in organizational processes and internal or external relationships that we looked at. Okay, so it is contingent. It is dependent on your size, how complex you are, your strategies, considering variations in your processes and internal and external relationships. And that is true. Before you take any structure, you must consider these things. So we first start with the first one, which was developed by Benz and Stalker, which is the mechanistic and organic structures. Okay, so an example of the contingency theory is the management study of Benz and Stalker. They identified two categories of organizational structure, that is a mechanistic structure and an organic structure. Now, Benz and Stalker found that neither structure is inherently better, but certain contexts favor one over the other. So an organic structure is more suitable for entities that need to be responsible to changes, quick changes in their product, market, and the environment. But when it comes to the mechanistic structure, they are better suited for businesses that are in a stable environment. And it is gradual. Their change is gradual. So their research also revealed that entities with a structure aligned with the environment tend to perform better. Okay, because anything that changes in your environment, you're able to respond to it. Okay, for instance, an entity with a mechanistic structure performs better in a stable market, because that one, since the market is stable, you have a lot of experience, you have a lot of policies that you can implement, because over time you gather knowledge. But the ones that easily change, are you getting it? They have to adopt quick strategies each time. And that is why people think the mechanistic structure better performs than the other. But sometimes the market may never be stable, or your environment keeps changing. So that's also the disadvantage. So when it comes to the mechanistic structure, it is best when you're in a stable environment. It follows the traditional hierarchy, there are formal rules. It is mostly the normal vertical communication we know, and there's the structured decision making. But when it comes to the organic, it's for rapid changes. And also, there's a less rigid organization, meaning you can't follow the normal traditional tall, flat business thing. It's flexible because there are fewer rules. And here, you remember what we call the freewheeling opportunist, and maybe the logical incrementalist can try to, abide by this one, and even the agent adaptation people, they can try to adapt it as and when they go. And all kinds of communication, whether formal, informal, everything works here. and it is more participatory decision making. Okay, here people will come together because things are changing. What do we need to implement? What do we need to do? So that's the difference. So be ready to explain the mechanistic and organic systems based on the nature of the organization that you are given and how the organization is actually changing. Now, this is the Benson Stalker mechanistic versus organic structures. Now, when it comes to the next one, which is what will feature mostly in your exam, okay, is Mintzberg building blocks or Mintzberg organizational structure and its organizational configurations. So Henry Mintzberg argues that the nature of the organization structure varies with differences in processes and internal and external relationships. He suggested that there are 5 elements or building blocks in an organization. The way in which the organization is organized most effectively depends on which of these elements are dominant. Okay, so we have to know the elements, and when it comes to the domination, that becomes the configuration, how the organization is configured. So there are 5 building blocks, but 6 configurations. Make sure you remember this. It's not a difficult concept. So we first start by looking at the elements. Okay, so we have, you can see the top here, which is the strategic apex. We have the middle line, which is middle management. We have the operating core, which is the operational management, or the workers and the supervisors and the foremen, those who control, I get in it, the day-to-day activities, or those who do the day-to-day work. Okay, so we have support staff, and we also have the techno structure. So what are they? The top management is what we call the strategic apex. We have the middle line, who are managers and management structure between the strategic apex and the operating core, which is the tactical management. Then the operating core represents the basic work of the organization and the individuals who carry out the work. So the support staff are the people who provide support services, like you see the shared services. So the IT, the maintenance staff, repair, cleaning staff, they work with everyone. They are the support staff, okay? The functions that we can put separately. Also, then the techno structure are those who do not have any direct line responsibilities, but they seek to standardize the way the organization works. So those who design your systems, your staff manual, your maybe your HR manual, your IT manual for people to follow. They are the techno structure. Okay, they put together some technical standard for people to follow. Hence the name techno structure, right? So mostly these people are those who design organizational routine for you. This is what you follow. This is the organizational handbook. They are the techno structure. Okay, so remember this. Now, in terms of these are the building blocks. They are 5, not so. So SMOST. Remember, SMOST. So strategic apex, middle line, operating core, support staff, techno structure, SMOST. Okay, that's it. Now we move to the 6 configurations. So Mintzberg has 6 configurations, organizational stereotypes. Okay, so he identifies 6 organizational configurations, each having a different mix of the 5 building blocks. So he suggested that the most suitable organizational configuration would depend on the type and complexity of the work done by the entity. So the first type is a simple structure where the dominant component is the what? The strategic apex. So here we have the CEO having all the control, there's direct supervision, and the relationships are centralized. So if you relate this with the organizational structures we looked at earlier, this looks more like what? The simple or the entrepreneurial structure, right? Where there's a boss and then the operating core are under. Okay, so with this one, it is mostly found in an entrepreneurial company, not so. So the strategic apex exercises direct control over the operating core, and there's no middle line because it's just boss and workers. So there's little or no support staff for techno structure. The strategic apex might be an owner or director of the company. And this type of structure is very flexible and can quickly react to changes in the environment because the strategic apex controls the operating core directly. Okay, so this is the first type. Please remember simple structure. The next structure is what we call machine bureaucracy. With this one, there's a functional structure and there's a lot of planning processes and there's centralization of the strategic planning. Are you getting it? But now there's a lot of policies to follow, meaning that the dominant component here is the techno structure because there's high standardization of work processes and routines. So in machine bureaucracy, the technostructure is the dominant element, and the entity is controlled and regulated by what? A bureaucracy. And the emphasis is on control through regulation of staff and work. Also, it is difficult for an entity with this type of organization to react quickly to organizational or environmental change. Why? Because the policies and standards are standard. They are what? They are stable. Also, it's difficult to change. They are rigid. So this structure is therefore more suitable for entities that operate in a stable business environment. So if you are looking at Benz and Stalker, how can you relate this? Is it more mechanistic or more organic? This is more mechanistic. It works in a stable environment. So you see, all the concepts are interrelated. Okay, so we move to the next one, which is professional bureaucracy. So here, what happens is that there are a lot of functions the same way. And also, you have all the functions. Are you getting it? So the dominant component is those who actually work. Okay, the professional people who work. The operating core is the dominant component. You can see from my diagram. So the structure is more functional. The processes, we have self-control and cultural processes. And also relationships are decentralized or devolved. Okay, this is where there's high standardization of norms and knowledge or data resources, and it mostly follows a flat structure. There are a lot of stuff under a few heads. Okay, so in this type of structure, the operating core is the dominant element. Mintzberg gave the name professional bureaucracy to this type because it is often found in the entities where the operating core consists of highly skilled professional individuals. So yeah, we are looking at an accounting firm, right? There are a lot of professionals working. There's the IT specialist, there's the partner, there's the staff, the trainees who are all chartered accountants, okay, or a law firm, or maybe we talk about maybe a group of specialists who provide healthcare. Okay, so this is an example where the operating core was specialized, but the same way the techno structure has a lot of standardization on how they work. Okay, so please remember the professional bureaucracy for professionals. So the operating core is the dominant component. Now, when it comes to divisionalized form, the middle line is the dominant element. We've seen some diagrams, so you know how they look like. So I didn't worry myself to bring diagrams again. Now, in this structure, the middle line is the dominant element, and there's a large group of powerful executive managers, and the organization structure is the divisionalized structure. So here there are a lot of divisions. So each is led by a divisional manager, as we looked at earlier on the divisional structure. So in some decentralized structures, divisional managers are very powerful, and they are able to restrict the influence of the strategic apex on the decision making. So remember, divisionalized form goes with divisionalized organization structure. Here, the managers or the strategic business units or the tactical level are the dominant ones because they control those down the line. Then we have what we call adocracy. Okay, adocracy. This is an organization with a complex and disordered structure, making extensive use of teamwork and project-based work, just like the matrix structure. Okay, so here we are more concerned about how to use teams to achieve an objective rather than a particular structure. So adocracy. It comes from the word ad hoc. Okay, something which is not frequent. Okay, so it may be that when we want to do a particular project, then we go for this. Okay, so this type of organization will be found in a complex and dynamic business environment where innovation is essential for success. Maybe a new product is being launched. We need to put a team together. They need to work together. Okay, so these organizations might establish working relationship with external consultancies and experts. So the support staff element can be very important. The support staff are who will be doing most works. They will be combined in a particular project or team. Also, just like we saw in the matrix structure. So this may work in a team-based structure and matrix structure. And the dominant component here is mostly the support staff. Then the last one is missionary organization. So in this type of organization, all the members share a common set of beliefs and values. So there is usually an unwillingness to compromise or accept change. Okay, so this type of organization is appropriate for small entities that operate in a simple and fairly static business environment. So here, what happens is that we all have a certain common set of beliefs and values. And also, we don't want to accept change. We want to go with the status quo. It is what it is. Okay, so these are the things that you need to know when it comes to organizational structure. In our next session, we are going to start by looking at organizational culture, and organizational strategic change.